The day has started off with a tremendous amount of volatility, and I would expect that volatility to definitely continue. Everything is pointing to a climax in the Israel-Iran war in the next 2 to 3 days. Israel says it has more tricks, and the United States, through the President of the United States himself, is creating psyops on a level that I think is really amazing and fun to watch, quite frankly. If it wasn't so critical, it would just be like watching a great movie. Telling people to flee Iran, leaving the summit early, hinting at entering the war. These are all huge possible bluffs, but because of the Trump factor, you can't ever know whether they're bluffs or whether he would really do it. Certainly has the capacity to do it. So it's really hard to know which way. There's a bunch of folks that are saying that the Republicans are split over, whether we should go ahead and bomb the mountain and destroy the uranium equipment, or whether we shouldn't, and that people will hate Republicans that are, in the one camp will hate Trump if he does enter the war, and folks in the other camp will hate Trump if he doesn't bomb the mountain because it'll be weak. Quite frankly, I trust Trump. That's just me. I think he's got the information in front of him. If he decides to bomb the mountain, I will be happy. If he decides to if he decides to accept Iranians suing for peace and believes that he can put together a great deal to eliminate their uranium enrichment program that way, I'm good with that also. I'm going to trust Trump. I do not think I have better information than him. I do not think I have greater wisdom than him. But maybe you have a completely different opinion. I'm certainly not going to judge him based on that decision. I'm going to judge his overall handling of the presidency, which right now I couldn't be more excited. The markets have responded to all of that, though, and to some softness in the stats this morning. We'll talk about those in a minute. The Fed, of course, is meeting today and will make their decision tomorrow. I do not think that the soft manufacturing and retail sales numbers from this morning are going to change their course, unfortunately. As Larry said last night, as I've been saying for months, I believe that the Fed should reduce probably at least 50, maybe the entire 100 basis points at once. This would show a signal to the bond market that they're completely wrong in the way that they're keeping these rates up. Anyway, that's just my opinion. So that's where we are in general. Then we get down to the world of Tesla. So there's a lot of split going on there too. It couldn't be more split now between those who think that Robotaxi is the savior of Tesla. I don't think it's the savior of Tesla. I think it's one element. I think it will dramatically increase sales and profits, or revenues and profits of Tesla. But I believe that Optimus will also do that in spades. It'll do it in a much greater degree. I also believe that energy is a growing and exciting business. I also believe that when full self-driving becomes unsupervised, that the sales of Tesla vehicles will go through the roof. And then if you've been following me the last 3 or 4 days, I believe that over the next 3 years, nobody will be buying private vehicles any longer, period. There'll be no private sales of automobiles in 2029. That's just my opinion, but I think I'm right. I'm really, if I've ever taken a look at the future and believed that I saw the future, I think the future is zero. Nobody will be bought. Well, 5%, 10%, maybe 5 million or 10 million cars a year, something like that in 2029. People just won't buy private vehicles because there'll be no value in owning a private vehicle. Barron says this morning, everybody is waiting for the launch of Tesla's self-driving taxi service in Austin. How shares will react to the launches? Anybody's guess. CFRA analyst Garrett Nelson wrote recently the launch should be largely anticlimactic and lacking the fanfare of last October's Robotaxi day. A lot of good news is already priced into the shares. Coming into Tuesday's trading, Tesla stock was up almost 40% since the company's first quarter earnings conference call when management said Tesla was on track for the June launch. After the launch, Nelson is focused on how the taxis perform. Well, that would be smart. It rates shares a hold and has a 320 price target for the stock. Piper Sandler analyst on the other side, Alexander Potter, rates the shares a buy, and has a $400 price target for the stock. He feels differently than Nelson. We expect the stock to sustain upward momentum in the coming weeks as more information is disclosed. That sounds like Randy Kirk. Whoa. Then some analysts are worried about the car business. Tesla's expected to deliver about 400,000 cars in the second quarter, according to FactSet. That will be down 10% compared with 444,000 delivered last year. The decline comes after deliveries dropped 13% in the first quarter. Fundamentals are coming in worse than expected, wrote Wells Fargo analyst 𝐂𝐦𝐚𝐢𝐥 in a Tuesday report. He added that following U.S. President Donald Trump's elimination of the waiver that allows California to regulate its air emissions, Tesla is facing fewer zero-emission vehicle credit sales, and that will weigh on earnings and free cash flow. 100% right. I've talked about that. There's no doubt that it's going to reduce free cash flow and reduce the amount of earnings. Langen rates Tesla stock a sell and has 120 price targets for its shares. That is idiotic. It's just stupid. Ask me how I really feel. All three analysts seem to have very different opinions on the stock. That is unusual for Tesla. Take Wall Street price targets. The average analyst price target is about 308. That average doesn't mean all that much, though, because price targets range from roughly $100 to $500 a share. The $400 spread is more than 100% of the current stock price. The spread for Alphabet stock is about $75 a share, about 40% of the current stock price, as an example. Investing.com says that Tesla is facing deteriorating fundamentals, free cash flow problems, etc. And according to let's see, who is this that's talking? Maybe it's them. We now expect full year deliveries down 21%. To meet consensus estimate of 411, Tesla would need a 50% jump in deliveries in June. Wells Fargo just forecast just 343,000 units, which is closer to Troy Tesla's number. The note also flagged worsening margin dynamics. We just talked about that. Meanwhile, slower Model Y sales, lack of updates on the affordable model, and minimal progress on Robotaxi and Optimus are said to be eroding investor confidence. I would say that only the slower Model Y sales are causing that erosion. Valuation remains a concern. The stock trades at a staggering 172 times consensus 2026 EPS, but the 2026 EPS is going to be far higher than the consensus, so that number is going to be problematic as time goes by. While gains from Bitcoin holdings and eased China tariffs may offer limited upside, the analysts concluded the razzle-dazzle is getting harder. The execution risk and delayed product rollouts weigh on sentiment. Well, the Model Q reveal is causing me a little, not angst. I could care less. Did I say that out loud? I don't really care if they ever do a Model Q. The real business is robotaxis. And as I just said a minute ago, Tesla's not going to be selling cars before 2029. They will stop selling cars to consumers for private use maybe as early as 2028, maybe even earlier than that. And it won't necessarily be because they make a decision to do that. It'll be because all of the cars will be either put in their own fleet because they'll see the opportunity, or they'll be selling it to other fleets because they see the opportunity. This is from Business Insider. Tesla vehicle insurance registrations in China soared sequentially last week, but with the second quarter almost done, registrations are still down more than 3% compared to the first quarter, when China vehicle sales were arguably the only bright spot for Tesla's vehicle sales. Tesla insurance registrations in China were 15,500 for the week of June 9 through 15, up 80% from the 8,640 the previous week, but there was a holiday last week. However, 11 weeks into quarter two, Tesla registrations are roughly 3% below the seasonally weak quarter one and down 17% compared to a year earlier. None of these articles ever mention about the complete changeover of the factories in the first quarter. Through the first 5 months of 2025, Tesla vehicle sales in China's domestic market have fallen about 8% compared to the same period last year. Meanwhile, Tesla rival Xiaomi is poised to release its Model Y killer earlier than expected, adding pressure to Tesla in the highly competitive Chinese market. Not when Tesla FSD becomes unsupervised. All these other guys will just have to pack it up and go home. U.S. sales of Tesla vehicles in the U.S. fell 16% in April, according to recently released data from S&P Global Mobility. Tesla stock edged down prior to Tuesday's opening, even with the good China news. I added that part. According to Guggenheim analysts on Friday, wrote that Tesla stock continues to be driven by Robotaxi and political narratives in the near term. Guggenheim expects Q2 global sales to be about 360,000, and that they believe a sizable negative revisions will soon be coming out by other analysts. The current consensus has Tesla vehicle deliveries at 399, which is probably too high. I haven't really looked at it that hard because I don't really care anymore. Tesla advanced more than 10% last week, reclaiming the 200-day moving average. Chief Executive Elon Musk set a tentative date of June 22nd to launch. Despite surging on Robotaxi bets following the April 22nd conference call, Tesla's down about 18.5% for the year and has retreated 33% from its all-time high, which was, of course, an artificial all-time high created by enthusiasm and emotion based on the Trump victory. Baird analysts last week downgraded Tesla to neutral from outperform, unchanged 320 price target. Tesla is a known autonomous vehicle or AV operator in Austin as of June 17. They've added that information to the Austin reporting. Tesla stock has a 21-day average true range of 5.37%. That's according to Market Surge charting tool, it gauges the characteristic breadth of a stock's behavior. Stocks that tend to make large jumps or dives in daily stock market action, the kind that can trigger sell rules and shake investors out of the stock, have a high ATR. Stocks that tend to make more incremental moves have a lower ATR. Tesla has a 70 composite rating out of a possible 99. The stock also has a 92 relative strength rating and a 59 EPS rating. Okay, after all of that, let me just say this is Randy Kirk, if you didn't already figure that out, and you can always like. You can subscribe. Why haven't you done that yet? That would just be so kind. And then hitting notify will be helpful because later on today, you've got the regular guys. Nicholas Gibbs will have plenty to say tonight about so much. Who knows? It might be a 2-hour show tonight. And then Brian White, we already know what he's going to say because I already recorded it. That'll be about 7:45. Be sure to watch for those. All right. Advanced estimates of U.S. retail and food services sales for May of 2025. This is May, looking back a full month now. We're June 17th, and this is only recording May. Adjusted for seasonal variation and holiday trading day differences, but not for price changes. We're $715.4 billion. That is down 0.9% from the previous month, and down 0.6 down was what was expected. It's up 3.3% from last year. Total sales for March 2025 through May were up 4.5% from the same period a year ago. Well, that's pretty decent. I think that's why the market might have been bouncing back a little bit after being down. Retail trade sales were down 0.9% from April, up 3% from the same period last year. Non-store retailers were up 8.3% from last year, but food service and drinking places were also up 5.3% from May of last year. Retail sales less auto were down 0.3% versus up the 1.1 expected. So retail sales overall were down, but auto sales down even more. We also had this kind of reporting. We had import price index, which last month was up 0.1, was expected to be down 0.1, came in at 0.00. So no change on import price. That's really, really interesting. If you take away the fuel, it was up 0.3%. Now that is a pretty decent uptick. So that's taking fuel out of the equation. So that would be a little more of what you might expect. Industrial production, which was expected to come in at down 0.1% after being up 0.1% last month, actually came in down 0.2%. So a little bit worse than expected, but not crazy, especially after being up slightly last month. Capacity utilization, which was expected to be a soft 77.7, came in even softer at 77.4. So that would be why you saw some negative action this morning in the markets. All of that is slightly soft. Now, would that be good or bad? Remember, being slightly soft might be good in terms of the Fed and or the bond market finally relaxing a little bit on these interest rates. Trump's rating this morning is still at 52%, no change on that. Trueflation comes in at 2.1% on increased pricing, and that is pretty much in the range where they've been for a week or so. They were much lower a week or so ago, but now have been right around 2%. All right, where are the markets right now? Let's see what's happened. Okay, so as noted, the markets went down sharply, including Tesla, very sharply down early, but now has been slowly but surely inchworm back up. That's what it looks like, right? A little inchworm back up. Okay, so we've got Tesla right now down 1.55, which is a little bit worse than the NASDAQ, the 2 to 3 times the NASDAQ, which is the NASDAQ is down 0.38 right now. The Dow is down 0.13, almost back to the green, looking like it probably will get to the green. S&P is down 0.28, but moving flatly. NASDAQ and the S&P are moving this way, whereas the Dow is moving up. We have got all the Magnificent Seven are down, every single one. And mostly they're moving in every direction you can possibly imagine. There is no directionality right now to all of that. The Cathie Wood stocks right now, you've got a couple of them, you've got most of them up after being down. So these are recovering. So again, one might think that the bond market would be, the yields would be headed down. And I think that's going to be correct. Let's see. Yes, yields are, but not very much. 1.8 basis points down to 4.436. That is not very exciting to me. I'd like to see 4.25, as you know, on its way to 3.99. Oil prices are up again, up $2, $1.92 to $73.66. Not horrible, but not great. We got natural gas up 3% at $3.86. That's pretty high. Gold sitting down 19 at 3,398. That is certainly hanging in there. And silver continuing up 1.79% at $37.10. We're a buck and change away from all-time high, even taking out the asterisk. You know what the asterisk is? I got to say it every few days. The asterisk is that there was a run on an attempt to capture the silver market about, I think, 10 years ago anyway, which failed, but it got silver up to 38 and change. But it's never been anywhere close to that since, after that was foiled. The dollar is steadying, and I'm showing it mixed right now. You got Bitcoin down 3,627, which would assume a little bit of risk off. And that's at 105,000. And you've got, that's all that you've got. I wanted to go back and check the VIX. Let's put that, I was going to put that in permanently. I forgot. VIX, you've got the VIX right now. Whoa, yeah, up. Wow, but up 3.19%, but it's at 1972. So it was down to 1670. I didn't notice it was that low. So lower than that, 1650. So yeah, that was pretty low, but we're back up to 1972. Again, I expect something's going to happen over the next 3 days. It's probably going to be all over by Friday. Okay, that's me. That's my best guess. You can have your best guess. That's my best guess. My best guess is that Iran will be tucking tail one way or the other between now and Friday. We will have an agreement with Iran between now and Friday because they will either be completely decimated or they will just make a deal to allow us to come in and destroy their stuff. Okay. Last night, Larry Goldberg and I, of course, you want to go back and look at that. I will put a card right here for going back and checking that out. It is still very cogent and useful. And later on today, Nicholas Gibbs at around probably 5:30 and 7:15. I'm sorry, 7:45 for part 2 of this week's Brian White set of videos. All right, that's all I got right now. Let's should we take one more look? Sure, we should. Take out this and take a look. Tesla down 1.69% right now, 323.58. Nothing, not really very, given what's going on with Iran, Israel, until that is settled out, I think things are going to be a little jumpy. It's been great talking to you.